Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so I was hoping to have enough energy to put out an options theses overview for the week tonight. But unfortunately, as you can probably tell, I've got a bad cold, lost a lot of my voice. And I was considering just putting out a post going over this data, but this is actually just a little bit easier for me to just record a video going over my thoughts. And so, what stood out to me from all the options contracts that I look over is the data on Intel, ticker symbol INTC. So this here is looking at data from January 31st, so just 1 day's worth of data. So I wanted to start here, look over at the chart, and then also look back in time over about the past 2 weeks, because there have been some interesting things going on with the Intel options data that I really think that a bottom is in, if not already very near. I suspect, over the past couple weeks, Intel did hit rock bottom. And so, yeah, I just kind of wanted to go over my thought process with this. And so, this is data from Unusual Whales. I've more recently gotten, a little bit more comfortable with interpreting this data. I'm just going to try to do it briefly so I don't get lost in the weeds with it. But generally, what you can see is that volume here was a mix between being negative and being green. So here, net selling of contracts, here, net buying of contracts, but over the course of the day, waxing and waning between negative and positive. But with that, what we can see is that the thing that really stands out to me, I'll start with that, I guess, probably a little bit easier, is the net put premium here is down more than $4 million. And we can see that in the data here with this red line coming down from the zero line, coming down and staying down. More than $4 million worth of puts being sold net. So there were definitely some puts being bought, but the net puts was negative $4 million. So that's bullish. $4 million saying, hey, I'm done being short, taking that money off the table. So that's a bullish sign. And then with that, while not as bullish, we can see that the net call premium increased, but it only increased by a little over $220,000. So, not as impressive as millions of dollars, but still it's positive, so that's a good sign. And so we can see that with the green line here coming down, going up just below the zero line, but then ending the day positive. And with that, with all of this trading of call options, we can see in yellow the stock price as that did, come down, go back up a little bit towards the middle of the day, but then ended the day net negative, net down. And so, this has me intrigued because there wasn't a lot of buying of calls, but there was a pretty massive selling of puts, as we can see here. And I fairly recently put out a video going over the same type of thing. It was actually this video that came out about 12 days ago when I was saying that bears are running away from Intel. And so I believe I put that video out on January 20th. That was Martin Luther King Day when the stock market was closed. And so we can actually look back on the chart to see where the stock price was. And so when I recorded that video, the market had closed on January 17th. I believe that was a clip from one of my options theses videos that normally come out on Saturday. And so I recorded that with the data from here on the 17th. And then the following trading day on the 21st, we actually topped out and then started to pull back. So that video was actually kind of a bad call, or at least it wasn't timed that well, because just after it came out, we put in a top and we retraced to around the 786 here, marked by, this light blue line here, and that is a retracement from the low that was hit on January 13th at $18.73, going up to the high that we hit on the 21st, which was at a price of $22.41. So that's how you get the retracement, and the 786 is marked there at $19.52. We actually closed the week on Friday, January 31st at 1943, so being below that level. So it's not a good look, also being a bearish engulfing candle there. So it does seem like this is a fairly bearish look. We did close at the low from Thursday. So on January 30th, the low was 1943. So we did not completely engulf the trading of that day. So I think that is important to note that we closed exactly at that prior low. So maybe what we're seeing here is a fake out. Maybe what we're seeing in the options data suggests that the bottom could be in, or if not in right here, maybe this bottom over here at 1873, that was the low that was hit on the 13th, maybe that is the bottom. And so I think that this would look really bad if we started to go lower than 1873, even just a wick below. That would be putting in a lower low, and that would break the pattern here that we're potentially forming of putting in higher lows. So if we go back to 1873, that would invalidate that. But what we can also see here is there is this solid blue line here. That was a gap that we had formed on the way up. Normally, whenever I mark gaps, I make them dashed until they're filled. This one has been filled, as we have spent multiple days trading below that gap fill level. So that is now behind us. And then if we look over here, there aren't any gaps to the downside that still need to be filled, as the gap that was here. On the 14th, we closed at a price of 1920. Over here on the 15th, we hit a low of 1917, so that gap was filled. So there are no gaps to the downside as of right now. So I think that's good. But this could, of course, continue lower. I do have this level marked here at 1886. That's a 786 based on a retracement from the low of 2009, I believe, going to the high of 2021, so at the end of that bull market. So the 786 from that long-term retracement is at 1886, and that has more recently seemed to be acting as kind of a double bottom, triple, quadruple bottom effectively that we've seen. So I think that there's a lot of support to the downside if we go lower. But again, if we break 1873, I'll just mark that over here. Let's see, with a red horizontal line, 1873. I'm just going to lock that in place and make that red. So we know that's kind of, a level we don't want to be going lower than. But, I didn't necessarily want to be talking about the chart too much. I wanted to talk more about the options data. So I'll flip over there in just a second. But I did want to also mention the 786. We are trading around there. So I do think that is a good sign that this could very well be the bottom. And also, if we do go any lower than that, we do have some consolidation over here as we form this bottom. So maybe like 1920, that was the closing price on the 13th. I think that could potentially be a bottoming level. So we'll have to keep an eye on that one, as there might be a lot of support there. But anyways, I could just be rambling on a lot about the chart. So let's flip back over to the options data. And so we can see, this is just from the day of January 31st. And so what I wanted to do in making the post is I wanted to just do a 2-day comparison, just to kind of have the data for 2 days, just give a little bit of an overview. But one thing that I noticed when I did the 2-day overview, it says here, looking at the 1-day data for January 31st, it says the net call premium went up by 1.2 million, whereas the net put premium went down by 300,000. And so, I was wondering, am I reading this wrong? Is there a bug in the code or something that's being displayed here? And then, so if we do look at the data here from January 31st, what do we see? We see that the volume is green here all throughout the day, and that doesn't match what we see here for the 1-day data. So that has gotten me to think that this 2-day data, there's a bug in it. I can't trust this. Not saying that I don't trust unusual whales, but this data here is not consistent with what I'm seeing in the 1-day data. Maybe this data is incorrect, but I think a good way to kind of get a comparison is to go back further in time. Looking back 3 days, we see, okay, the volume varies here. That makes sense with what we're seeing on the 1-day. And then we see increases in volume going back the past couple of days. So maybe that's what the issue is. And then looking at the numbers up here, they do match what we're seeing on the 1-day. So, this is good. It's always good to be checking sources, double checking, do the numbers make sense? And so right here on the 2-day, they do not make sense. Or perhaps this is the data from January 30th and January 29th. If we go over to the 3 days, maybe that makes sense. I'm not really sure. I'm not going to interpret that too much because this is not really the point that I wanted to make. I wanted to make the point going back to about 2 weeks ago when I had put out the video following the trading on, let's see, January 17th was over here. And so I put out a video that called out this massive drawdown in put premium that you can see here in red. And so put premium on that day came down by nearly $16 million. You can see it in the number up here, but when my cursor goes over it, it will change. So I'm just going to hover over it, and you can see where the cursor is. That number is now around negative 16 million. So lots of puts being sold on January 16th by the end of that day. And so we could see a lot of drawdown in put premium. And so that was, let's see if we go back to the chart, the 16th was over here, big drawdown in put premium, and then we saw a massive move to the upside. All right, I was a little late in calling that just before the top, but what I'm seeing now is, consistent throughout all of these days is we have massive drawdowns in put premium going down millions of dollars. So most recently, so on the 31st, we saw that net put premium drawdown of $4 million. On January 30th, we saw a net put premium drawdown of over $3 million. Again here on January 28th, we saw a net put premium drawdown of $4 million. This is going to get pretty redundant. But what you can see here is the zero line is right around here where the cursor is. You can see that gray line going across there. And we can see that overall big picture, we've been seeing drawdowns in net put premium by millions of dollars. Over here, just to give some perspective, this is a net put premium drawdown of nearly $3 million. It looks like a drawdown of $2.83 million. Pretty massive. And so it's pretty consistent. We haven't seen too many, if any, days where net put premium has gone up. Over here, it does look like we saw some net put premium increase by $1.4 million. But overall, the trend has been the selling or the drawdown of net put premium. Whereas if we look at the net call premium, there hasn't been a ton of selling. There has been some net call premium drawdown of $2 million. So, there is that. But then over here, net call premium increase of $5 million, although by the end of the day on the 17th, that decreased to a total increase of around $2.27 million. Over here, we see on the 30th a net call premium increase of $5.61 million. So overall, this seems to me like the big picture call premium is more notably going up than it is going down. And if anything, net put premium is definitely going down. There is a net offloading of put contracts. And so that makes me think that the bottom is very well in or near for Intel, even though the chart looks fairly bearish here with this bearish engulfing candle. And so I just think as long as we're holding above 1873, I think that there are potentially massive gains to be seen with Intel that could span months, if not years, into the future. Just like, if I switch over to the weekly time frame, we can see where the 786 retracement originates from. And so if I do go back in time, we can see that it's this span going from the lows of September 2009 up to the highs of April 2021. So, that's 2009 to 2021. That's more than a decade of upward movement, and I feel like we could be at another time like that where we could see upside of, let's actually get a measurement of what that upside was. So going from that low to these highs, that represented, a nearly 800% move to the upside. And so let's see if I can cut this. I don't know if I can copy that and move it over, but perhaps I can just do it like this. I think that we're potentially looking at something that could be bringing price back up to those prices of, above 62, perhaps up to, $75 a share over the next decade. So big time frame perspective. But with that being said, I think on the shorter time frame perspective, I think there are a lot of signs suggesting that the bottom could be in as long as we're holding 1873. But there are also some things that are shorter term bearish. Like if we look at the max pain for Friday, January 31st, it was 20 and we closed notably below it. But if we look at some other things that, could suggest some bullish moves, is that if we look at this bearish bullish slider, majority is on the bullish side, but it's only 48%, so take it with a grain of salt. There might still be some more downside, just like there was following this move. But, there isn't this gap to the downside anymore. We filled that. And so, I'm feeling pretty good about Intel. I'm feeling actually really excited about it. But, do consider that with this big down move, there was a lot of volume backing it up. So we could be heading down to, let's say, 1920. Maybe that's the bottom before we really start to take off and, get back up to 22. 41 and beyond. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below. And if you found this helpful, make sure you let me know in the comments because it's tough on my voice and I appreciate it. Thanks a lot, you guys. Take care.